Transaction banking is and has been a gold rush, and I believe it will continue to be a gold rush. A few years back, Boston Consulting predicted revenues $509 billion. They've revised that upwards. McKinsey is talking about over $1 trillion. And I think the reason is the attention that's been given to corporate and transaction banking has gone up because of the way that businesses are changing in different parts of the world. And the introduction of SME banking as a serious subject, not just a side effect of retail banking, has really boosted that. If you're a company, you're interested in making your profits. You're interested in making shareholder value. You don't want different bits for different places. You want a solution, a whole solution to a whole problem. So I took a look at the clients of transaction banks. They're very different in size, in scale, in sector, in industry, but they're also all the same. They all look at finance through the balance sheet and the profit and loss. On the balance sheet you have your assets, cash at hand, that's position keeping. You have inventory management, that's about working capital finance. You have salaries on the P&L, that's about a multi-country, probably 30,000 small value payments with the unique attribute that the person authorizing the payments cannot know the name of the beneficiary. Unless you provide all of the services to support all of the items on a standard balance sheet and profit and loss, you're not really serving the customer. Virtual accounts is more revolutionary than people realize, I think, because it enables the firm to organize itself the way it wants to handle the money the way it wants to, not to do it the way the bank finds convenient. When you have what I would call a regulated account, some people call them real accounts, to me they're all real. When you have a regulated account, there's mandates, there's paperwork, there's processes, there's an enormous amount of reconciliation work is generated. With virtual accounts, you can decide, this is the way I want to run my business, and you can change that at will. And that just opens the door for escrow, for non-escrow, for client money, for insurers, for lenders, for real estate, for lawyers. And it gives banks the ability to create very specific sector solutions. Well, APIs and open banking in general, we've had APIs since the invention of computer programming, but it's the first time it's become a business topic. PSD2 as a regulation, I would argue, is one of the first regulations to actually focus on competitiveness and competition in banks rather than worry about capital, which is an important topic, but is not as directly applicable to day-to-day banking. With open banking, we are truly seeing banks having to compete across the whole supply chain and be best and know where they're best and focus. We've been absolutely delighted in 2019 that so many of the world's best corporate banks have won awards, and very many of them have won the Global Finance Awards, which are very prestigious. So we're delighted to sponsor this event and meet so many old friends.